Okay, so good morning, everyone. This is the macro snapshot for Thursday, January the 23rd, 2025. I had some technical issues actually getting into the office this morning, into the building, so sorry, this is a little bit later than normal. Okay, guys, so the main thing today, we just had the initial jobless claims, 10, 15 minutes ago. They came in at, I think, about 223,000, which is, slightly more than we've been getting for the last few weeks, but still, yeah, 223,000 here. Continuing claims, 1899 up a little bit as well. So although they're up a little bit, if you look at the average over the last 2 or 3 months, still very, very, very low. All things considered, as I like to say, in a recessionary environment, you're looking really to get 300, 350, 400,000 initial jobless claims to indicate that the labor market is weakening in any shape or form. So nothing to worry about there. It continues to tell us that the US labor market is strong. In terms of other stuff today, we don't really have any other sort of particular data. Tomorrow we have a first look at the S&P US manufacturing and service PMIs, which could be interesting. But the main event will be at 11 o'clock Eastern today. Donald Trump will be addressing remotely the World Economic Forum in Davos. Obviously, everyone wants to know how he's going to approach that. Specifically, if there's going to be any mention, I would say about two things about tariffs on Europe. And we know that, and also secondly, about the sort of global standard on corporate tax. So it's going to be interesting, especially from the tech company's point of view, to know whether he supports a sort of a minimum global corporate tax rate, and whether, in fact, he gives us any more detail about potential tariffs on Europe. Obviously, if he sort of reinforces this idea that there's going to be some kind of blanket 10% tax on Europe, or whether it's just going to be bluster and threats, we'll see. And no doubt the market will react one way or another to that. In terms of the tariffs, there are kind of two key dates which we have to keep in mind. And I think this is why the market is sort of treading water at the moment, just sort of not exactly sure what to go on. Trump has been talking about February the 1st. He's mentioned that date, February the 1st, which is what, 1 week away, as a key date for potential unilateral imposition of tariffs on China, Canada, Mexico, and maybe the European Union as well. We shall see, or whether, again, it's just a negotiating tactic to threaten those economies. And secondly, April the 1st. We know that on April the 1st, there's going to be a sort of a review, should give, some preliminary findings anyway from the US Commerce Department and the trade representative, basically to understand the situation with tariffs, just to understand the global trade imbalances. So it's like the Trump administration has essentially commissioned the US Commerce Department to sort of, check out the situation. And so we could be in a situation that I mean, April the 1st is what, a couple of months away, that even though Trump is talking a big game and being very aggressive, maybe there won't actually be any specific and concrete measures until then, and April the 1st, because even if April the 1st, the US Commerce Department reports back to the White House, presumably that would take a week or two or three or four to analyze those and then to formulate policy and to actually impose tariffs. So we could have a situation that for 2 or 3 months, the market remains off balance and doesn't exactly know what's going on. And you can see that a little bit, like I'm just looking at like a scoreboard here for sort of FX, major FX pairs, and also gold. And what you guys can see here is that essentially there aren't that many strong trends. Remember that a strong trend is really on this index, which is volatility adjusted from Saxo Bank, by the way. Thank you. Over 3 indicates sort of +3 or -3 indicates sort of a strong trend, and 4 or 5 a very strong trend. So the only really strong sort of trend at the moment is actually the British pound, which has been pretty weak, as you can see here, going back the last 7, 8, or 10 days. That's been fairly weak and fairly strong. And quite a strong sort of trend. The other trend, which has been quite strong, of course, is the positivity in gold. You see here spot gold XAU, which, as you can see, is trending towards the upside. I was reading some research earlier this morning, basically saying that there's sort of rumors in the market, whatever that means, about a big central bank buying a lot of gold. Who knows? Maybe the Chinese, the PBOC. But anyway, so gold seems to be supported for whatever reason recently. So, but apart from that, you can see that the US dollar has, basically, just been doing a little bit of sort of back testing here. is just coming off a little bit and been going up a little bit. So just trading water. The euro, nothing particularly strongly. So what this is telling me, looking at these trend indicators here, is that, as I say, with the exception of the British pound and gold, everyone's sort of in a wait and see mode. So we had the Trump, the trade leading up to the Trump election or the election, which Trump won. Then we've had the sort of bullishness on in the first day or two, basically saying that Trump, was talking a lot but hasn't actually imposed any tariffs. So I think the market's in wait and see, and maybe this informal sort of conference today with Trump at Davos, or will give us a bit more information. So that's something to keep a lookout for. Just in terms of a couple of these currencies, I just want to look at the euro. Where are we? Pick up the chart here. So if we look at the euro USD, that's had a little bit of a rally for the last few days. I'll just pick it up here. So this is the daily chart here. And what you guys can see here is that obviously it's sold off aggressively going up into the election, bounced off this sort of technical support, and now is waiting for the next move. It's interesting. I mean, what's going to happen? I think this we have to wait and see about tariffs. It's as simple as that. It's frustrating. It seems the European economy is doing okay, not strong, but not crashing. And tomorrow we do have the flash PMIs, so the Purchasing Managers Index surveys for the month of January. So that could give us a little bit more color. So maybe the next direction here for the euro could be determined by the PMIs, because if the PMIs come in weak, that could signal, that could give the green light for the ECB to maybe even have a slightly more aggressive cutting cycle. And if we actually look at what's priced in for the ECB, just want to bring this up here. If we go on to the where are we? So if we look at the ECB, it's about 100 basis points for the whole year. So you can see that for the upcoming meeting in a week, one full cut here of 24 basis points. So 25 is essentially priced in. Really what the market wants to know is like what happens over the next year. And as you guys can see, we have about 3.5 cuts priced in by the end of the year. So if you look here on the left here, mid-December meeting, we have 3.7 cuts. So almost 100 basis points, 94 basis points priced in. The question is, if we sort of continue to see a bit more deflationary sort of action, if we start to see the economy weakening, and as I said, tomorrow we get the PMIs, which will give us more information, could it be that the ECB actually even cuts more aggressively? Some people are calling for a jumbo cut of 50 basis points at some point. If that's the case, you're going to have to say that the outperformance of the US economy versus the European economy will continue. The interest rate differential will perhaps go up again in favor of the US yields, which has come off a bit recently, as I think I showed yesterday. And that should cause a bit more strength in the US dollar, the dollar index, and obviously weakness in the euro. So I think let's see what Trump has to say today at Davos, at the Davos call at 11 o'clock today. And then let's look at the European PMIs tomorrow and just see the direction of travel. I think that's going to give the next impetus for the euro. The other thing which is quite interesting, just where I've got this up, we have the BOJ decision this evening, I think about 10:30, 11. I'll have to check that overnight. Now, as you guys can see here, there've been a lot of leaks to the press, and we can see here that for the BOJ, you can see that there's a 95% chance of a cut. So 23, let's call it 24 basis points have been priced in. So a cut is priced in. At this point, what would be surprising would actually be no cut. That would be pretty hawkish and probably a positive for the yen. Again, we have to see in the press conference and forward guidance what they're thinking, because if you look out, again, going out for the whole of 2025, you can see what the market's pricing in, including this evening, is 2.5 cuts. So about about sort of 60 basis points. So if we get 25, at that point we're only pricing in about 1.5 cuts for the rest of the year. So we'll see what's happening. If that's the case, there could be if that's kind of confirmed or not denied by Ueda, if we still continue to see relatively sticky inflation there, and if we see wage pressures going up in Japan, it could be that gradually over a 3 or 6 month time frame could give a little bit of strength to the yen. We shall see, against maybe a currency like the euro. But the one thing to keep in mind is that really what we have to figure out with the yen, and I'm just going to pop up the US JPY chart here. So as you guys can see here, the dollar has been pretty strong against the yen. Let's see what happens now. We have a little bit of a fib retracement here. So you see from this impulse here from the 3rd of December, we had the 38% fib retracement. Seems to be bouncing a little bit, a bit of support here. is that the BOJ and monetary policy is very important for the yen. But I would argue, if you look from correlations, I was looking at some research, really what drives the yen is more the US yields at this point. And the differentials have been very much in favor of the US in terms of the US yields have been a lot more than the Japanese yields. And if we look at something like the US 10-year, for example, very highly correlated, if you overlay the USD JPY with that, very highly correlated to the US 10 and 30-year yield. And honestly, I think that in order for the yen to gain strength, we would probably need the US 10-year yield to maybe come off, quite a bit. Let's say down to the 4.5 level. That looks like a pretty nice level there. I think really in order for the yen, as I say, to have a significant and consistent and ongoing move against the US dollar, um, we would need to see this 10-year yield come down to about 4.5 or so. This needs to be coming down a little bit. So really the puzzle piece to understand is like, okay, the BOJ may hike, but that's fully discounted at this point. So in terms of the next move, we're going to have to see, as usual, what Trump decides to do about inflation, the deficit, the budget, tariffs, and of course the performance of the US economy. And as we just saw half an hour ago from initial jobless claims and continuing claims, US labor market seems to be going pretty well. Earnings season so far has been fairly good for most companies. So no sign yet of the US economy falling down. And that's reflected as well. You could see in the stocks. We saw the stocks tested, like a look at the SPX here. You see yesterday on the cash market, basically tested at highs, just coming off a little bit. If we look at the futures, basically sort of got to the highs and just sort of pausing. The next move up again, you've got to say in the absence of negative economic data, the fact that Trump maybe is adopting more of a negotiating point of view rather than an aggressive imposition of tariffs. And if earnings continue to be good and US yields do not rocket up too much more, they're probably the main factors. It's possible that we see new highs in the equities. I mean, it's going to be interesting. We're seeing deregulation and some other positive sort of factors. So it's possible maybe equities take a bit of a pause here, but I wouldn't rule out, another move higher. As long as I say, inflation does not go up and remains at current levels, even drifts downwards, as long as tariffs are not universally imposed, and it's a much more complex, slower, piecemeal kind of imposition, as long as the US economy remains robust, and as long as earnings remain as expected or even higher than expected. If we get all four of those factors, I think the equity markets will certainly outperform bonds. And we're seeing as well the VIX down at pretty low levels. So that's also supporting it. The market seems to be relatively happy. Although one thing I did pick up on, which may or may not be interesting, if you look at the CBOE, the skew index, which is kind of interesting to look at. I've got that here. I opened it up. Yeah, so the skew index here, 100, a reading of 100 indicates a sort of a neutral. And the skew is basically the difference between the amount of people are paying for puts versus calls. And this is the difference here than the VIX is that the VIX is much more for at the money 30-day implied volatility, whereas the skew index here from the CBOE, SKEU, that's for sort of much deeper out of the money puts. So basically, the higher this goes, this is indicating that there's more demand. People are paying more for out of the money puts, which in a certain sense could be construed as a risk indicator. So the higher this goes, and what you guys can see here is that it's relatively high. That's indicating that there's more positions taken for long out of the money puts, which in theory is indicating that the market has some degree of risk for some degree of fear of tail risk, basically, a tail risk event, which would push the market down a lot. Now, historically, I was reading some research. It's not super correlated with realized volatility, this index, but it is interesting just to see that, there is still some demand for hedging and for out of the money put protection. So that's just something to keep an eye on. Although, as I just said, the VIX itself is at pretty moderate levels, which, all things considered, is a positive for the stock market. That's about it, guys. There's a couple of other things. Might just have a quick look at the oil market. That continues to trade a little bit soft. Let me just bring up the front contract here. Oil came off. I mean, it hit the triple top in the March contract, and you can see it's had a pause. This is actually the continuous contract, but in the March contract, this actually was a triple top here, and it was rejected. So it's pausing now. of the last few days, and it's come back for a 38% fib retracement here. As you can see, this impulse here. This is an interesting moment for oil. Again, I'm not going to go into it to this video. There are competing factors here. The possibility of Trump stopping imports from Venezuelan oil. We know that the Biden administration just before the end put significant new sanctions on oil tankers and insurance companies, disrupting the flow of Russian oil. We saw yesterday that Trump, interestingly enough, was a little bit aggressive about Putin and basically threatening Putin with further sanctions on oil if they didn't, kind of make a deal about Ukraine. So there seems to be a little bit of pressure ramping up there. On the other hand, we also know that there's plenty of supply capacity. We know that OPEC, like Saudi Arabia, still has 2 or 3 million barrels a day of extra unused supply capacity. So there's no lack of oil, and there's some question marks about the global economy, especially China and Europe. So oil at this point, I mean, for people trading this, I don't know. Potentially, you could take a shot here and say, well, but I don't see a strong catalyst personally to get involved just yet. I think we want a bit more information about Russia, China, sanctions. And of course, we have the drill baby drill rhetoric coming out of Trump, which has probably caused a little bit of negativity as well. I mean, I don't know what world Trump's living in that he thinks that drill baby drill is going to bring up the price of oil. And as he says, his stated objective is to reduce inflation through having lower energy prices. And hey, maybe he's going to get his wish because energy prices in the shape of crude oil in the US are going down. Just one other thing, we did get some news overnight. There was some kind of directive out of China that state-owned mutual funds and insurance companies were being encouraged to invest significantly in equities. So the real question here is like, is this like some kind of equity, pop for the Chinese stocks? Kind of interesting. I'll be looking at FXI today. Let's have a look and see if that's trading up or down. The pre-market looks like there's a weird kind of tick here. Pre-market looks pretty stable, maybe down a tiny bit. But if we look at overnight, we can look at the Shanghai 300. As you guys can see on the daily, not a lot of action there. It popped up for half an hour. I was looking at, and we can look at this the CN50 as well, actually down. And if we look at the Chinese mainland stocks traded in Hong Kong here, the Hang Seng CEI, also red. So the point is this sort of emergency action was initially, like for an hour, taken by the market as a positive for Chinese equities, but very shortly reversed. So is the market taking that kind of directive as sort of a sign of panic that something desperately needed to be done to prop up the Chinese equity market? Because so far the reaction in the Chinese equities has been pretty weak. And as I say, be kind of curious today to look at the FXI, the large cap, and maybe the KWEB for the internet companies. And I think the other one, what's the other one? YINN. Let me just have a look at that. I'm curious. I'm not super familiar with this one. Whoops. Another YWN. Yeah, daily. So it's 3X. Okay, that's the leverage one. Yep. Okay, and you can see this one. This looks like a leveraged bull market, a China stock ETF here, which someone was mentioning. Pretty flat today, actually down a little bit. So kind of interesting that there hasn't been much reaction. Okay, guys, I want to leave it there. As I say, running a little bit late this morning. I think the main thing is to be tuning in at 11 o'clock Eastern for Trump's comments to the Davos World Economic Forum. Let's see if he drops any tariff bombs or blusters. We shall see. Thanks very much. Have a great day. We'll be talking soon. Thank you.